Austin's here, Mike's here, Gerber's here, Tariq's here. Good morning, everybody. Thomas, Craig, Trey, what's up, brother? Tim, I already said good morning to you. Kenneth, Micus, TJ, everybody's here. Teeman's here. Grant's here. Kareem is here. Kareem has blessed us in the feed, everybody. Mo, good morning, brother. Good to see you. So everybody's ready? Let's start with this on GBPUSD because this is the most pressing ASFX entry that we have from today. Now, after we go through this, I want to go back and look at a couple of the entries from yesterday. If you're in ASFX, I sent some markups to you already in the Discord chat, but I know a lot of you guys that are watching, you're not in the group yet and you want to learn, so we're going to go over that. And then I even want to go over one of the questions that I got in my DM this morning on Discord from one of the guys in the group chat. He sent a really good markup with a couple of good questions, and I want to share that with you guys as well. So we've got a couple of pairs that we're going to work through here in this little clip. So sit with me. If you have any questions, put them in the comments. I'm going to try to go slow, try to break it down real simple for you. So what we're looking at here first is GBPUSD. What I want to do is put it in replay mode so we don't get distracted by the current price action. First thing we always look at when we come in, of course, you guys can read my notes and screenshot this if you'd like, but I'll show you the notes and we'll work through this in a second. But let me just give you how I would look at this, how I did look at this morning. So I see the perfect market sentiment line. That was very, very clear this morning, that yellow market sentiment line. Very clear that it's looking for shorts today. That comes after the huge move down yesterday. You can see price action moving lower yesterday, actually moving through its average daily range, pulling the market sentiment line down into the sell zone yesterday as well. So that's a really good sign that you would think the short bias could continue today. Now, here's where experience comes into play, and here's where the ASFX checklist comes into play. The experience comes in and it comes out of me in that any time I find divergence against the trend on a Friday, I'm very skeptical to trade towards that divergence. I will trade after the divergence has been broken and retested, because then I know it's not a significant level anymore. It's being broken and used, in this case, it would be used as resistance on top for a move lower. But we don't have that here. When this 3-candle entry formation presents, it is an A1 formation, as you can see from my notes. There's a couple of things wrong with it. The first one being the bullish divergence, like I said. And my experience always tells me that on Friday, if we've seen trend continuing really clean throughout the week, as we have on some of these USD pairs, this is GBPUSD, then we want to make sure we're not disregarding the divergence, because that could be where the reversal or even the sideways movement finally comes into play after trend carried this thing all week. So today, at 6:15 this morning, we had this A1 entry present. So we're going to mark that up. We're going to draw the divergence, and we're going to see here that this does not break past the low from yesterday's pin, breaking out of this horizontal support zone. I drew the zone with the pin from yesterday's low. It follows what we call the 2-candle rule, where the 2 candles to the left and the 2 candles to the right are not lower. So this is our bottom. This is the level that we want to see broken, retested, and then traded out of to the downside. So this morning, we see this presenting. It's tempting. I know some of the guys in the group chat took the trade. It is tempting. However, let's keep working through the checklist, and you'll see why I didn't take it. Not only do you have this divergence present, as you can see from my first little knock here, but second, it is an overextended candle. If you were to measure this body versus every other candle body from the start of the day till this point, this is the biggest body of the day. Now, it's not a massive bar, but the definition of an overextended candle is the biggest body of the day. That's how we define it in our back testing, and that's how we define it as we trade. So right there, I've got this divergent level that I have not broken yet. I'm right at it, and I know through many, many markups, through many, many live trades, through much experience, that until this line is broken and retested, we don't want to trade because it can bounce off this line, and it very often does. We talked about that in a lot of the trades so far this week. Go back and watch the previous streams, and you'll see that. So we've got the divergence present. We've got this overextended candle. Right there, that's 2 knocks against the setup. On a Friday, with 2 knocks against the setup, that's automatically, because it has these 2 knocks, going to be a C setup. The fact that it's a Friday and we are showing bullish divergence against the downtrend makes me skeptical. It makes me think maybe this trend is going to reverse, because I've seen that happen so many times on a Friday. So I waited. If you take this candle by candle, the next bar looks good. It actually is bearish, moving lower underneath the zone. That's a good sign. However, that at that point is not a great place to take the trade. The entry would have been at the close of this 6 to 615 bar, not at the 6 to 630 bar. You would not want to take an entry there. That's not what we've back tested. So I still waited, and I watched to see how it handled this pullback to the 8 EMA. But very quickly, you can see Within 30 minutes, it actually breaks through the 8 EMA, ruining the potential for me to try to get an entry here as it pulled back. Because what I'd like to do, if you check out the 1 minute here at the same time, at that point, I'm going to sync up the vertical line that you see right here. That pullback here on the 1 minute, it comes to the 50 EMA, comes back down through, and that's typically where you might look for that pullback entry. However, what's the market sentiment line doing here? It's starting to rise. It's not moving lower. And if we're going to see this move lower, we're going to see market sentiment hold under the 50 value. Right here, you'll see that 50 value. As soon as this starts to come up towards the 50 value, that tells me that this is not in control. The sellers are not in control. It's either indecisive or we might have buyers coming in. And at that point, when you look back at the 15 minute, you would say it does kind of make sense that we've got buyers coming in here because we've got support from yesterday here. And every time it's come to this zone, what has it done? It's bounced out of it. So to think that this is going to break and fall all day, of course it could. Market sentiment says that. However, the safer entry, if you read my notes, this is what it says. The safer entry right here would have been to see this break, retest the zone, and then trade it down off the zone later today. So for me, there's just no reason to rush into it. I haven't taken a trade yet this week. It's my first week back after being sick. I wasn't going to rush into a trade, especially a trade like this on a Friday with divergence against the setup and no potential to get good risk reward on the 1 minute pullback because the 1 minute started to look bullish versus bearish. And I wanted to stay bearish if we're going to take an entry. So that's basically everything that went into this trade. It was a C setup, which instantly kind of turns me off. And then on top of that, like I said, the 1 minute didn't have a great setup for that tighter risk reward that we would like to see. So there's just nothing for me to pull the trigger on. I'm very patient this week. And especially, like I said, because I'm going away next week, there's no reason for me to be rushing around trying to pick and choose every C setup to see which ones are going to be the winners. That's not the way that it's going to work for me. To that point, if we take a look back at CHF-JPY from yesterday, if you guys remember, we were looking at this to come lower. It actually finally breaks out of the Asian range here at 9:45 in the morning, and that's when it breaks out and moves lower. Notice, even after that break of the Asian range, it still slows for 30 minutes, 2 15-minute bars, before it finally extends to the downside. So for me, this is a great example of why you want to wait until we're out of the Asian range before you look to take trades. If you would have been short earlier in the day, you would have been chopped around. You can see it's sideways here, specifically if you look at this 2-candle formation. If you look at this 2-candle formation, it's not sideways very long, 30 minutes, and then you're down into profit. That's as much as like literally, if an A1 formation takes longer than 30, 45 minutes to move into profit, it's probably wrong. So this is just in time, so to speak. But this is a better setup in my opinion. Again, perfect market sentiment, but what here do you not have? You don't have divergence against the setup. There was no bullish divergence telling you that this might rise. So this is a better setup in my opinion than the setup today on GBPUSD. Does that make sense to everybody so far? This was the best trade that we've seen. Market sentiment is still bearish today. This could easily hold the 200 EMA and still come lower. Are we going to be looking to trade it at that point? Probably not, because you'd be trading towards the 50 EMA. Right now it's in an upshift. See 8 and 21 crossed up. So probably not finding a trade now that this has broken the 50 EMA right here. If this had held the 50, definitely could have been interesting to see if we get a D1 or something to bring it back down. But for now, nothing with GBPUSD, and that's the reason why I avoided that today. And now you can see, comparing that to CHF-JPY, why the divergence makes such a big deal. Why the divergence is such a big deal. Does that make sense to everybody? Are there any questions about that?